welcome to the closing beat, everybody. Happy Tuesday. I never remember what day it is. I got to get better at this. Anyways, this is our quick financial update show. We talk about the stock markets. We're financial advisors here at Jazz Wealth. As you can see by the shirt, we build and manage our own portfolios. You can see those on our website. And today we're basically just going to cover the stock market. You got a lot of the information above, a lot of stuff below, and some stuff off to your right. If you look off to the right, well, we've got a lot to cover today. The market's higher, sharply higher on the day. You got they're calling it a tentative deal to stop the government from shutting down on Friday. Win or lose doesn't really matter, just the market's responding to it. You know why? Because it's just one less thing we have to focus on for the moment. You got trade news, you got the government shutdown, earnings season in here, the possibility of an economic slowdown. Will the Fed do what they say they're going to do and slow down or not? So you got enough to focus on. This is just one to check off the box to say, well, looks like they're going to agree on a deal. I guess you never know until it's signed off on. But for now, that's what everybody's expecting, and that's how they responded today in the market. So you got the Dow higher by 372, the S&P 34 points, and the Nasdaq about 1.5% on the day. You also had trade news out of China. Last night, the Chinese markets, which you'll see above there, very strong day for them, actually. We've got our Treasury Secretary and some other people over there helping to negotiate that trade deal. More than likely, they're just going to push aside what they said really mattered, which was the intellectual property and that sort of thing, and they'll focus on some sort of short-term deal, extend the deadline, make it seem like a win-win, and everybody's happy, at least for now. With the markets being as high as they are, I'm going to shift on over here to our charts. With the markets being where they're at there, you've got the S&P on your screen there. We've been in between the 200-day moving average and the 50-day moving average. We've talked about that being no man's land. Today was a great attempt to break above the 200-day. We actually poked above it by just a little bit. I think that's not enough really to get people excited, especially since it's not on economic news. This is more on political news. Political rallies tend to not have the same oomph in the short term as, say, a Fed announcement, any kind of update as far as the economy goes, good earnings and things like that. So we'll see. What is happening, though, are those of you that sold in December. See this little decline right here? This is the entire December sell-off where $44 billion was sold in 401k funds, not from people that were retiring, from people that were just scared and wanted to sell out. Well, now what's happening here lately is it's making you feel like you're missing out. You are missing out. And so basically, if you look back through December, the problem is wherever you sold, which was not right here at the beginning of December, chances are you sold way down here towards the end of December as you panicked, or those people panicked. And so now you're way behind and you're sort of forced to dive in on these positive days. Today was another one of those days to make you feel like, crap, I got to dive in if I sold and panicked through the downturn. Well, that'll teach you, learn about the markets and why you don't have to actually panic when things fall. Some notable news to cover real quick. Job openings, 7.3 million. That's a record for new job openings. Small business optimism. The NFIB does a study on this one. I'm not sure. I didn't look to see how many people they study. Some of these studies are a joke. This one down 3 points since the government shutdown. So small business is saying, hey, that really affected us. And you can kind of feel it if you go back through what happened through December and such. You can kind of feel how people were a little more pessimistic, so I understand. Here's a picture of the Nasdaq back to the 200-day moving average for you to check out there. You got the Dow pushing higher. Of course, Caterpillar, Deere, these names that are affected by the Chinese trade news. Obviously, that's going to help things in that category. So not much else to say. Just a really strong day there. Handful of headline news, and I'm sure it's going to continue. Sector-wise, let's go through it. We've got oil back higher, almost by 2% today. OPEC announced that Saudi Arabia was actually going to cut their production by more than expected, by about 500,000 barrels per day more than expected. They said they'll be at 9.8 million barrels a day in March. That's a lot less than expected. Like I said, 500 million. Technical traders, you guys are still not really impressed though. We're stuck inside of this range, although today's news, as it starts to wear down the overall supply of global oil, you may start to see more improvement here in price. But for now, it wasn't enough to really get anything done. Really, the sort of excitement was in semiconductors. These guys remain on fire. SMH is the symbol I'm using today. Back above the 200-day moving average, we got that short-term little pullback. And remember, a lot of these companies rely on International revenues. I looked up a few for you. Intel, 80% of their overall revenues come from overseas. Only 20% come from the U.S. And Texas Instruments, let me see. So Intel is your biggest holding in the SMH, if that helps you. That's about 12%. The stock was higher by 2.5% today. Texas Instruments, they get 87% of their revenues from overseas. So any great news out of China is going to affect Texas Instruments. Any bad news out of China or passing through this sort of deadline of March 1st, that's going to be a problem as well. So that's the semiconductors. They did well today. Bank stocks did well today. Higher rates. If you look at interest rates here, there you go. Yields spiked again poked higher for the second day. I wouldn't call that a spike. But that certainly helped the banking stocks out today as well, all across the board. Your big banks, I'm using the XLF to kind of illustrate the big banks. There you go. If we go into regional banks, they poked to new highs as well, up about 1%. So all good, really. Just although it may be short-lived, decent rally here across the board. You had a whole bunch of sectors higher by 1% or more, including energy, healthcare, transports, consumer discretionary, communication services, retail, and home builders. Home builders got the best of the bunch today, breaking above the 200-day. If you have home building stocks, they're finally starting to kick in. I don't know if that matters to you, but finally starting to kick in there. All right, let's go through individual stocks if you're paying attention. You got Under Armour, great day for them here, retailer of athletic apparel, if you're not familiar. You've got Under Armour, different classes of stock, depends on how you want to look at it. Class A stock is UAA, and then Class C is UA. I usually just use UA, it's faster to see. They responded the same. You got earnings and revenue better than expected here for the company, so you got a strong day of almost 4.5% on the day. They also committed to their forward guidance. They just think things look good. They refuse to address some of the competition out there, and hey, if things are going good, then let them enjoy. Okay, I can never say this name, man. Molson Coors. So the beer maker, basically, down about 10% on the day. Earnings and revenue a little bit lower than expected. The real sort of push to the downside here came because they have to restate some of their financials. No one ever likes to hear that. Not only because it shows sort of mismanagement, maybe they blamed it on the Miller partnership that they had, but it's not that people say, "Hey, you guys don't know how to manage your funds there. That kind of sucks." What really happens is people look back and they go, "Okay, well now what's an appropriate valuation? What should we expect going forward? How much are you going to change? What metrics did you guys mess up on?" And so it creates a lot of indecision. Now from watching the show, any indecision in the markets or in a stock individual, it's just going down, right? Nobody wants to participate in that. So they're working on it. They said it's not a material change, meaning it's not something that's really, really going to be a drastic change. So we'll see. I'll tell you one thing, Ambev, ABEV is the ticker symbol, up 1% on that. So got a little sort of ha-ha rally in that one. That one's in our international fund, so nice to see that one sort of perk up there a little bit from the international stocks there. Coty, C-O-T-Y, this one's been in the news a lot lately since earnings. They blasted off on earnings there. You had Goldman Sachs come out and say that they loved the valuation at these prices here. No, JP Morgan, I'm sorry. They said that one about this, that it was real good valuation. Apparently they were right. JAB, which is a very popular private equity group out there, they want to offer the ability to buy 150 million more shares at $11.65. So it'd be about right here. They're not stupid. So right there at $11.65. The issue here is that now they would have over 60% of company stock. So they're trying to do a little bit of a takeover here, right, on the makeup manufacturer. They would have about 450 million shares if this goes through, and it looks like I don't see any reason why. It's a tender offer, so anything's possible here. But that's the news on Coty. Shopify, shares actually finished positive on the day, despite it's starting lower. You can see it started right at the 20-period moving average there. Earnings better than expected, revenue better than expected. The company came out later in the day and said they saw higher business signups than expected and payment processing. So if you have like a Shopify page and you're actually processing payments through it and paying them their little cut, they saw an increase in that. That's not only seen as a good for them, but good for the small business environment. It's a way to kind of gauge like, Are there a lot of that going? Is there a lot of that going on, or is everybody gone to Amazon and things like that? So, anyways, that's that one. EA Sports higher by 5.25% today. Remember the other day, the CEO said that Apex of Legends, they did 3 million signups in 3 days, right? So it was like this big deal. I'm sorry, 10 million signups in 3 days. It was a big deal. Well, now they're up to 25 million signups in a week, which actually beats Fortnite, according to my research there. So I don't know if that's like the next great game or whatever, but in the gaming space, you got EA strongly higher. And I would say, hey, ATVI participated in a little bit of that. It was up about 4% today. However, they had earnings come out after the close. They missed on revenue, missed on guidance. Shares are trading, they've recovered. So shares are trading back around 42. So not bad. Maybe something else I missed in there. I didn't get a chance to look it up. Also reporting after the close, TripAdvisor. So let's see what we got here on TripAdvisor. A little bit lower, down about 57.5-ish, 57 in 3/4, right at the 50-day moving average. So a little bit lower after earnings. I actually didn't have time to look that one up, so I'm not sure. Guessing they missed on earnings somehow or guided lower. Netflix, this is in our aggressive stock fund. This is like the technical portion of the show. So I want to go through stocks that technically look strong or weak. We started this yesterday. Before I answer any questions for you. Netflix breaking out of this little range here. Very strong technical pattern with about $380 as the next stopping point. So for short-term traders that like this, that keeps coming up on people's radars for sure. And then if we look at analog devices, we own this in our aggressive stock fund as well. To me, a little too far, too fast. So this is one that, you're always happy when you have great positions and everything's going well, but you don't like things to move too far, too fast. The 20-period moving average acts as a rubber band. Look over here. So you got this rally that went a little too far, too fast, always pulls back. Always, always, always. That's not my opinion. It is actual fact that happens. And so you just don't like to see something move too far, too fast. I think that one will pull back a little bit. And M&T Bank. So MTB is the symbol. We talked about this yesterday as potentially breaking out of this little range here. Today it poked its head above there. It looks good. So you'd expect that one to continue to perk up as well, especially with rates pulling back. Yields, higher yields. So that's what I got there. If there's any questions I can answer, I think I've basically covered everything. I know it was a lot. Tomorrow you've got earnings from AIG in the morning. Let me pull up my list here for you if you care. AIG, Cisco, Dish Networks, Fossil, MGM, Network Appliances, Teva, and Yelp will be reporting earnings tomorrow. Heather's asking thoughts on Bank of America Merrill Lynch. Oh, you're not asking about the stock. I'm sorry. No problem. My bad. Okay, great. Well, it looks like no questions. We covered it all. I changed a little bit. You guys didn't even notice. That's good. Good, good. A little work to do here. Hey, David. In Chicago. I'm trying to get my wife to think about that for a little trip we're going to do. So far, she's not on board. So I will go fight that battle and get back to work. If we helped you in some way, hit the subscribe button. That really, really, really helps us. And we'll be back tomorrow, of course, to do the same thing all over again. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.